welcome you tune into Market Fatafat with me, Ankita Saxena, and with me as always is Snehi Shah, and this is the show where we get you all the buzzes in trade today, either on the back of news flow or in the back of technical charts. But first up, let's take stock of how the market is shaping up. Big day coming in for India indeed after Operation Sindoor. We had managed to recover from the day's lows after we saw the initial knee-jerk reaction, but right now we have turned absolutely flat. We're trading along the flat line. Nifty has slipped into the red. Nifty Bank still holding on to a shade of green, but Nifty Bank is also turned absolutely flat right now.
Absolutely, that's what the market is panning out to be right now. We have slipped below the 20,400 mark when it comes to the Nifty. A slight tinge of red is what we're seeing. Nifty Bank holding on to the green but absolutely flat over there as well. Sensex, despite the cut, continues to hold over the 80,500 mark. This is something that we have seen ever since the opening bell. So holding steady on that front as well. India Wix, a 0.7% fall coming in from a 2% spike that we saw earlier. Looking good for India Wix as well. It's actually the broader end of the markets that have seen a very sharp recovery today from the day's lowest point. You have the Nifty mid cap that's up 1.2%. Nifty small cap also not doing all that badly. It's up 0.8%. So looking good for the broader end of the markets today. From the Nifty 50, you have Tata Motors, that is the top sectoral gainer today, followed by Shriram Finance, Tata Steel, Coal India Power Grid. That's helping the Nifty stay afloat. On the flip side, what's adding pressure is Sun Pharma, Asian Paints ahead of its numbers tomorrow. You have HCL Tech, Bajaj Auto, ITC, Grasim, all trading with cuts of more than 1% today. Sectorally, it's the auto pack that is in focus today, of course, on the back of that FTA that was signed last evening. Auto in focus at 1.4%. You have metal, energy, realty, media, PSU banks, IT that are in the green. IT and PSU banks very nominally in the green. On the flip side, pharma and FMCG continue to stay under pressure. So that is what the market breadth is looking like right now, and that's what the construct of the market is largely right now. We seem to have recovered slightly on the Nifty, but still a little bit of recovery left to reach the day's highest point when it comes to Nifty 50.
Absolutely. So let's move on and get on board our guests. Lakshmikant Shukla, who's the technical analyst, institutional research, Yes Securities India, joining us on the technicals, and from the research team we are joined by Gaurav. Hi, good afternoon to both of you. Let's get going with all the stocks that are in focus today. First up is a big buzzer. Then that's Aarti Drugs, that is trading with gains of almost 14% in trade today because the company reported a healthy set of numbers for March quarter FY25 with the net profit climbing 32.7% on a year-on-year basis to 62 crores, up from 47 crores in the same quarter last year. Now, the performance was supported by a 9.2% increase in the revenue, which stood at 677 crore compared to 620 crore a year ago. Now, indicating an improvement in demand conditions and higher volumes. Operational performance also saw an uptick with EBITDA rising to 8.9% on a year-on-year basis to 93 crores from an earlier 85 crore rupees. Now, however, margins really remained steady at 13.8%, broadly unchanged from a year ago period, suggesting cost pressures continuing to offset the gains from the revenue growth. But on the back of a strong set of numbers coming in for Aarti Drugs, that is up in a way 14.5%.
Okay, let's move on from that stock and talk about the next stock that's in focus. Lakshmikant, you picked out Narayana Hrudayalaya for us. It's a stock that we don't generally talk about when it comes to discussing technicals on the show. Tell us what are the next support levels you're watching out for this one on the charts.
Narayana Hrudayalaya stock is seeing a decent upside move, and we have seen also positive upside move from last few days. So we expect that this stock can go higher, and recently it has found support from the levels of 1,765 from its 20 DMA with the formation of bullish candle, and we are expecting that this ongoing momentum will continue in this stock with the support of which we have seen around the levels of 1,760. So that would be the strong support for Narayana Hrudayalaya, and we are expecting the target of 1,922 in the upcoming session. So overall setup is very strong. So one can go long from the current level also and can expect upside move toward our target of 1,920 with the stop loss of 1,760.
Okay, next up is to watch out for Narayana Health. Let's move on from talk about a high flyer in today's trade, that's Pyramal Enterprises. Shares of Pyramal Enterprises rose over 7% today, even after it reported a 25% fall in consolidated profit in the quarter gone by. But if you take a look at the detailed numbers, Pyramal Enterprises reported a 25% fall in consolidated profit in quarter 4 to 102 crores compared to to a net profit of 137 crores on a year-on-year basis. Despite this, the stock is up 7.5%. This is because the consolidated profit for the entire year FY25 was at 485 crore rupees against a loss of 1,684 crores on a year-on-year basis, which was in FY24. The revenue from operations increased to 2,854 crores during Q4 from 2,473 crores on a year-on-year basis. Other income has also risen to 179 crores from 55 crores. On the flip side, total expenses have reduced on a year-on-year basis, so that is also something that has worked for the company well on an overall basis. Chairman Ajay Pyramal also said that the company has concluded 3-year transition phase and has now repositioned its business mix for the future. He said that after the RBI's approval for the merger of Pyramal Enterprises into its subsidiary Pyramal Finance, both companies have approached the NCLT seeking approval, and this could take up to 5 months. So that's the outlook on Pyramal Enterprises. Strong numbers on a whole year basis, on an annualized basis. The stock is up 7.5%.
Alright, that's Pyramal Enterprises up and away 7.5%. Coming to you, Lakshmikant, Max Health is what you picked out for us. Tell us what you see on the charts for this one, because this hasn't really moved much in the last 6 odd months, or for that matter, even on a year-to-date basis, this stock hasn't really done much. It's remained pretty flat. Tell us from here on what moves do you see coming in on Max Health?
See, 2 days back we have seen falling trendline breakout in this stock with the formation of bullish candle, and yesterday it has also closed above its previous high of 1,140, and then after we have seen today that it has also made bullish candlestick pattern with decent volume. So we are expecting upside momentum will continue in this stock in the upcoming sessions. Even if you look at the indicators, so where we have found that RSI has given a positive crossover, even MACD is started trading in the positive territory. So overall setup looks positive. So we are expecting upside move in Max Health, and we are expecting the target of around 1,225 with the stop loss of 1,100.
That's for Max Health. Gaurav, let's come to you with an earnings candidate and very strong set of numbers coming in from BSE. Stock is also up 6%. Take us through the earnings fine print.
First, we have seen a very significant growth in terms of BSE's profitability as well as revenue. So first, let's look at the numbers for Q4. While revenue increased almost by 10%, profitability almost have doubled. It has increased almost by 125%, and we also saw EBITDA going up as high as 150%. A sequential basis, and on back of this, when we look at the brokerages also, now they are being very bullish. So for an instance, we have got Motilal Oswal, who maintained their buy rating and a target price of 7,600 rupees. What they're saying is that when we look at fourth quarter's revenue on a YOY basis, we have seen a very significant jump of around 75% in the revenue itself, and that was driven by main segments like services and other operating income. Other than that, when we look at FY25's revenue, that has also increased. It has actually doubled if we compare it with FY24, and from here on also what they believe is that the F&O regulations will be actually a beneficiary for for BSE, and that is the reason when we look at stock performance also, it was at a point was as high as 9.5%, but now it has settled. It has given up some of the gains, but still up more than 6%. So definitely watching out on BSE on the back of the strong results.
Alright, moving on then, let's move on to the next stock, that is Power Grid. Lakshmikant, that's what you picked out for on the charts for us. Tell us what you see in the charts for this one.
See, after making high of 322, the stock has seen a little bit of correction, but it found respite near the levels of 20 DMA. Now it is struggling to surpass the levels of 200 DMA. So this is the breakout call. So one should wait for the breakout of the levels of 313. Once it clears the hurdle of 313, then we could see sharp upside momentum in Power Grid toward the levels of 339. So that would be our expected target, and during that target, one can keep the stop loss of lower levels, which is coming around the zone of 300. Until it holds this level, we could expect that we could anticipate this breakout of the levels of 313, and once it crosses this level, then we could expect upside target of 339.
Okay, so those are the levels to watch out for on Power Grid, but let's focus from stocks for a while and talk about the latest developments that are happening. In the latest development, post the Operation Sindoor, Union Home Minister Amit Shah has called for a meeting with Chief Ministers, DGPs and Chief Secretaries of border states shortly. The Chief Ministers of Jammu and Kashmir, Punjab, Rajasthan, Gujarat, Uttarakhand, Uttar Pradesh, Bihar, Sikkim, West Bengal and the LG of Ladakh and LG of Jammu and Kashmir are also all set to attend this meeting. Earlier, Prime Minister Modi chaired a Union Cabinet meeting and is meeting President Draupadi Murmu to brief her on the operation as well. So that's the latest coming in on Project Sindoor that was executed late last night. But let's also get you an update on everything that's been panning out on the aviation front on the back of this operation. While the Pakistan airspace has not officially closed, international airlines are avoiding the geopolitically tense zone. Following missile strikes on targets inside Pakistan by the Indian Armed Forces, authorities closed Rajkot and Bhuj airports in Gujarat for civil aircraft. However, they will remain open round the clock for military planes. Sameer Dixit is joining us with the latest details on this. Sameer, take it away.
Operation Sindoor has impacted the air travel in the northern part of the country. Aviation authorities have closed many of the airports which fall in these northern parts as a precautionary step, and which has impacted the domestic carriers, whether it be Air India, SpiceJet, Akasa Air or Indigo. The airports which have been shut by the aviation authorities include a long list like Srinagar, Jammu, Dharamshala, Bhatinda, Chandigarh, Jodhpur. These are airports, and there are a couple of other airports as well which have been closed as a precautionary step by the authorities. Indigo has announced that more than 165 domestic flights have been cancelled which were about to operate to Amritsar, Bikaner, Chandigarh, Dharamshala, Gwalior, Jammu, Jodhpur, even Kishangarh, Leh, Rajkot and Srinagar. So the flights bound to these airports or to take off from these airports were cancelled, and the flight numbers are beyond 165. Similarly, Air India has also cancelled dozens of their flights which were supposed to land or take off from these airports. Even SpiceJet, Akasa and Air India Express have also announced that their flight operations have been impacted, and the flight cancellations have been done till 05:29 hours 10th of May. The airlines have announced a one-time waiver or a one-time rescheduling of the flight option to the impacted passengers. Government says that they are ascertaining the situation, and based on which they will issue the new guidelines if required. But yes, Operation Sindoor, a retaliatory step by Indian government, has impacted air travel, and now the airlines are following the authority guidelines or the instructions.
Right, we'll keep getting you more updates as and when this trickle in. But for now, it's time for us to slip into a short break. Don't go anywhere. We'll be right back. Welcome back. You're into Market Fatafat, where we are getting you all the buzzers in trade today. Let's resume then with all the stocks. Then next up is Coal India, that is in focus today just before its Q4 results that are likely to come out. Let's take a look at what we can expect right before its results. The stock is up in a way almost 4.5% in trade today. We expect a stable performance to come in. The margin guidance for FY26 and e-auction pricing trend is crucial for us to watch out for. But on a consolidated basis, let's take stock of how the number is likely to shape up. As far as the revenue is concerned, we can see an uptick of 2% on a sequential basis. As far as PAT is concerned, we can see a downtick of 6% on a sequential basis and an 8% on a year-on-year basis. The margins are likely to come in at 32.3% is what we are expecting, but the EBITDA is likely to see a decline of 4% on a sequential basis. Also, we see the couple of factors that are at play. Muted e-auction premiums and muted pricing in FSA segment is likely to weigh on the realizations. The blended realizations are expected to fall anywhere between 3 to 5% on a sequential basis. The things that we need to watch out for are the volume outlook for FY26, the e-auction and FSA pricing trend, and also accounting treatment for the overburden going ahead. So these are the couple of things that we need to watch out for as far as the Q4 results for Coal India is concerned.
Okay, nifty major Coal India to come out with its numbers today. Let's focus on the next stock that's in focus, and that's Bharat Forge. Lakshmikant, you picked up this stock for us on the charts. If you take a look at the last 6 months of YTD, the stock has been deeply in the red. However, we've seen an uptick of 18% in the last 1 month itself. Do you believe that the beginning of this recovery that we are seeing is sustainable on the charts going ahead? And if so, what are the levels you are spotting?
The last 2 to 3 days, we have found that auto and auto ancillary are moving in the positive direction. So even if we look at the daily chart of this Bharat Forge, so where we had found that recovery has started at current levels, and it has found a strong base near its 20 and 50 DMA, which is placed around the zone of 1070 to 1080, and from there it has started making positive formation with positive crossover in RSI. So we are expecting that this positive momentum will continue, and we expect that the once it crosses its previous swing high of 1155, then after we could see a sharp upside momentum in this stock. So even one can buy at the current level also, and we are expecting the target of around 1230 with this stop loss of 1080. So as I told you that at these levels Bharat Forge has formed a strong base, so from there we are expecting a good amount of return in the upcoming sessions from this stock.
Okay, bullish outlook coming in from Lakshmikant on Bharat Forge. Let's move on and talk about Tata Motors, which is the top Nifty gainer. As we speak, the stock is up about 4%, and this is on the back of two reasons. First up, the company has received overwhelming shareholder approval, which is 99.99% of the shareholders have voted in favor to demerge its commercial vehicle business into a separate listed entity. As part of the plan, shareholders will receive one share in the new CV company for every Tata Motors shares that they hold at present. The rally was also fueled by the signing of the India-UK FTA, which is a free trade agreement. That's another reason why the stock is doing well. Now, this reduces import tariffs on automobiles from over 100% to just 10% under a defined quota. While specifics of the quota are yet to be disclosed, the move is expected to benefit premium auto brands, especially Jaguar Land Rover, which is JLR, Tata Motors UK-based subsidiary, by making its vehicles more price competitive in the Indian market. The dual development signals strong potential ahead for both Tata Motors and its upcoming CV spin-off as well. So it's a double positive coming in for Tata Motors. On the back of that, the stock is up 4.7% and top Nifty 50 gainer today.
All right, moving on from Tata Motors to another candidate that's doing well in today's trading session, and that's Paytm, which is up and away 7% in trade today after its quarter 4 results. Tell us, Gaurav, what does the result look like for Paytm?
Well, yes, a very good set of numbers is what we saw from Paytm, and the very positive point which remained in this quarter was that Paytm actually turned EBITDA positive if we exclude the ESOP cost in this quarter once again, as they had guided. And also the management has said that they will be PAT positive in the coming quarter. So let's look at the numbers first. When we look at revenue, that increased only by 1%, but when we look at contribution margin, we have seen an uptick of around 190 basis points on a sequential basis. And at the same time, when we look at EBITDA excluding the ESOPs, now that has come to a positive number of around 11 crore rupees. Now let's not forget that in this quarter itself, Paytm reported around UPI incentives of 70 crore rupees, and that is the reason when we look at profitability, that has also gone up to around 23 crore rupees of losses in this quarter versus what we had seen at a losses of around 208 crore rupees a quarter ago. Other than that, what they are saying is that from here on, in Q1 FY25 itself, Q1 FY26 itself, Paytm will turn a PAT positive, and they have also reiterated their guidance of around 30 to 35% growth in top line and 15 to 20% EBITDA margin. So definitely a very positive call from management also, and as a result, we are seeing a sharp uptick in the stock price. So on the back of this, we are watching on Paytm.
So that's the reason Paytm in focus on the back of a robust set of numbers coming in. Brokerages also sound bullish, and the stock is up and away as we speak. Lakshmikant, coming to you, Siemens is the stock that's in focus today. Of course, we've had a price adjustment on this stock, but tell us, what are the next key levels to watch out for? Because last 1 month, the stock has not done all that much. 3 months, it's up 5%. Tell us what's the outlook going ahead.
From last few days, this stock has been consolidating within the band of 3,000 to 22,880. But today, from the current level, it has given the breakout on the upside. So overall, setup is looking positive, as it has also found support from its downward rally, and it has also found base near its 20 and 50 DMA with the formation of bullish pen-told candlestick pattern. So as it has given consolidation breakout on the upside, so we expect the positive momentum in this stock toward the levels of 3,180, and one can go long from the current level also by keeping the stop loss of 2,870 on the downside.
Alright, so that's Siemens on the chart, but moving on to the next counter that is in focus today, and that is GMDC, Gujarat Mineral Development Corporation, or GMDC, and City Gold Pipes has signed a long-term supply agreement for limestone for Kutch's Lakpat Panipur mine for the supply of 150 million tons of limestone over a period of the next 40 years. On the back of this big long-term pact that has been signed by GMDC, that is up and away almost 2.5% in trade today.
Okay, so that's stock in focus, up 2.5%, looking good on that front. Let's talk about MGL. Next stock in focus, that's Mahanagar Gas on the back of its earnings. It's an earnings candidate. Good set of numbers is what the company has reported. This time around, net revenue has come in at 1,964 crores compared to 1,847 crores, which is an uptick of 6.3% on a sequential basis. EBITDA has also gone up by 21.5% on a sequential basis, coming in at 395 crores compared to 325 crores. If you talk about the net profit figure, a healthy 11.7% jump is what we've seen on a quarter-on-quarter basis. This time for quarter 4, PAT has come in at 247 crores compared to 221 crores. And EBITDA margin has also expanded quite nicely at 21.1% compared to 17.6%, which is up more than 250 bips on a sequential basis. Good set of numbers coming in. Stock is up 2%. We also have a brokerage call coming in. CLSA has maintained its outperform rating with a target price of 1,710 rupees per share. The stock is at 1,400 thereabouts right now. So the target that is shared by CLSA has a significant upside to it. So it's going to be exciting to watch out for if the stock is able to follow that trajectory going ahead, because fundamentally it's looking good, and a 2% uptick is what we've seen on the charts today on the back of a good set of quarter 4 numbers coming in.
Alright, moving on then to KEI Industries, another earnings candidate with a good set of numbers.
KEI Industries actually came up with good set of numbers, and that was actually a positive surprise for the street. Why I'm saying is that when we look at revenue, that increased almost by 25% on a year-on-year basis, but on the other hand, profitability has now expanded almost by 34%. On the other hand, when we look at EBITDA margin, although it has declined almost by 62 basis points, now it stands at around 10.3%. But all in all, good set of number is what we call for KEI Industries. Apart from that, brokerages are also a little positive about the numbers, because what they are saying is that they saw a robust growth in cables and wires in the tune of around 35% on a year-on-year basis. Other than that, significant outperformance was seen in the cables and wires if we compare it with the peers itself. EPC revenue actually declined, and that is the reason why we saw EBITDA margin contraction, which was in line. But other than that, they are expecting a sharp recovery in the stock price given the strong outperformance in the numbers. And as a result, when we look at today's market performance also, it is up more than 4%. So definitely good set of numbers. Brokerages are also a little bullish about the company, and on back of this we are watching out on this company.
Alright, moving on from KEI Industries to another high flyer, the textile pack. In fact, Gokuldas and Arvind Fashions are in focus today. They are trading up 9% in early trade today. Gokuldas is up almost 12.5% in trade right now, and Arvind Fashion is trading with gains of more than 1.5% right now after India and United Kingdom concluded negotiations for a landmark free trade agreement of the FTA. As a part of the deal, the 8 to 12% of UK export duty on textiles and garments will be eliminated, making Indian exports more competitive compared to countries like Bangladesh and Vietnam. Now, this is seen as a positive development for companies like Gokuldas and Arvind, which are active in textile exports. With FTA, India is now on par with Bangladesh in terms of apparel tariffs and enjoy a 12% tariff advantage over China. On the back of that, the textile pack is in focus today. Gokuldas and Arvind Fashion, both big beneficiaries of that, are in focus today.
Okay, so that's the reason the textile space is in focus today. But let's move on and talk about Avenue Supermarts or D-Marts. That stock has been in focus in today's trading session, and that's on the back of a brokerage note that's coming in that we've seen from HSBC. Now, the stock is absolutely flat. It had a steep decline in the morning at the market open, but has since managed to recover. HSBC's note on Avenue Supermarts downgrades the stock to a from hold. They've also cut the target price to 3,500 from 4,500 rupees per share earlier. Significant cut coming in their price rating that they've kept for the stock, because remember, on the fundamentals also, quarter 4 has been a very weak quarter for D-Mart. It's a 7% miss on consensus is what they've said, consensus EBITDA in quarter 4, and as competition dents margin, the company expects margin to be mature in metro towns and to remain soft going ahead as well. On the back of that, they've cut their FY26 and FY27 estimates by 19% and 21% respectively as well. So a little late reaction to earnings by HSBC, but nonetheless a negative call is what they have shared. Downgrade to reduce from hold and also cut the target price to 3,500 from 4,500 rupees per share earlier.
Alright, moving on to the next counter. Hiomoto is what you have picked out for us, Lakshmikant. Tell us on the charts, what do you see for Hiomoto?
After making bottom around 7th of April, this stock has started moving higher with the formation of higher tops and higher bottom. Now it is consolidating near its previous swing high of 3,995. But overall structure looks bullish as it has found base near its bullish crossover of 20 and 50 DMA, and we have seen some positive upside momentum from last 2 days also. So we are expecting that with the strong base which is formed around near the levels of 3,720, we could expect a positive uptick in this stock towards the levels of 4,170. So which is our target also. So we are expecting that sooner or later this stock will reach our target of 4,170 with the stop loss of 3,720 on the downside.
Okay, so those are the levels to watch out for on Hiomoto Corp. But let's shift focus to an ET Now exclusive. We understand from sources that the heads of private non-life insurers are all set to meet the DFS secretary later today. Let's go across to my colleague Anurag Shah, who has all the details about this. Anurag, take it away.
After meeting CEOs of life insurance companies, now today DFS officials are meeting CEOs of private non-life insurance companies. So in this meeting, PSU insurance companies chiefs are not participating. Private non-life insurance companies CEOs are meeting today, DFS official in evening today. So mainly this meeting is focusing on claim settlement issues related to the health insurance and growth in motor insurance premium. So these are the major points on which DFS would be discussing with CEOs of private non-life insurance companies. Apart from that, there are other issues also which insurance industry would be raising. One is that concerns over the automatic selection of surveyors, which was mandated by RDA, but insurance companies are not in favor of automatic selection of surveys. Insurance companies also to raise issue related to the notification, the final notification which has been issued by government related to the Golden Hour treatment scheme, now which will be administered by NHA only, and insurance companies were not in favor of that. Issue of lack of cooperation from hospitals for delaying in common empanelment and national health exchange adoption, and rationale behind uniform 12% GST on health insurance premium, how that will improve the affordability. Instead of 5%, how 12% would be beneficial. And as there is a data by the government that 50% vehicle on roads are still not insured. So how insurers want enforce support from government that more and more vehicles can be insured. So these are the main issue which insurance companies CEOs, non-life insurance companies CEOs will be discussing with officials of DFS.
All right, with that we completely timed out on this edition of Market Fatafat. Gaurav and Lakshmikant, thank you so much for taking the time out and joining us. But before we take your leave, we're leaving you with the Base 2025. That's the India's premier summit for entertainment, gambling, gaming and sports that spotlighted the country's digital leap. A key highlight of the Bharat Gaming Pavilion led by Dream Sports showcased India's global gaming ambitions. Let's have a look at this special report, and it's a goodbye from Snehi and I. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.